What's going on, everybody? My name is Lamont. I've been a full-time trader for 6 years now, part of the Chart Guys team for about half of that, where I head up our futures room and our swing report. In this video, we're going to go over how we planned out a trade for ARM. It's like a new cutting-edge semiconductor name, and also go over some potential plays within picks that have already shaken out. So without further ado, let us get into it. Okay, so first things first, here is our setup within ARM. So let me just clean this chart up a little bit, excuse me. So this one's already played out, which is obviously why this is part of the public video. But this idea was presented for many reasons. One is because it's potentially a big old cup and handle. Two, this is an IPO, and so um, it's not it's not in many ETFs yet, many mutual funds, whatever retirement products, but it's making like new age chips for like AI specific chips, hardware for them. So and I think they already have deals with like NVDA try to buy them. I think that fell through, and I think they already have deals with like AMD and Mike. I forget, but the idea is that they're a new player on the block. Well, not technically not a new player, but they've just IPO'd. They've been around, but they've only recently gone public, and there's just a lot of attention on it. And very often, when you have an IPO base and then break into an all-time high, very often it will run afterwards. It doesn't have to happen like that, but very often it does. And it's also a part of semis that are leading the way up right now, tech, which is leading the way up right now. And so that's why we were interested in it. Dan was interested in it. Lori was interested in it. And so we presented it to our Swing Report subscribers, and I'll include a clip for this for the original trade idea presentation at the end of this video if you want to see how we planned it out beforehand. But the logic of this was very straightforward, right? Because we knew that daily consolidation was very healthy, right? And this was really the key right here, right? So at this little guy right here, and you'll see this in the setup video, this tiny little bit of EQ, this little bit of balance here, this tiny little demand zone, value area high hold, value area high hold, value area high hold, value area high hold, etc. So this value area high just continued to hold price. So the idea was, because we sent out the idea here, we were thinking, okay, if we come back into the range, and then the reason why the top of the trade zone is here is because there's a good amount of volume traded here, and if they were going to be really strong right from there, then they probably wouldn't have they shouldn't have let much acceptance under this middle structure here. So that's why the trade zone started there. The middle of the zone is based on this. The bottom of the zone was based on this high and this high, right? This gap high. Why? Because, well, if the buyers are going to remain strong, then they would be fine as long as they can hold over this structure. And the change from this gap is being maintained as long as you're holding over 58.74. Then you throw in just a little bit of wiggle room under that, and that you have your complete trade idea. The targeting was based off of these highs over here, this prior high and then this prior high. So it was, again, it's all very technical, right? And it pretty much ran right to target. Once we did happen to get the breakout, you had a lot of time to take a position using the trade zone if you decided to. And then look at how price stalls at our target here. It literally spends like the most of the session balancing between the areas that we figured there might be problems. So if you are interested in this kind of analysis, or if you're interested in getting these trade ideas pushed to your email, we do regular alert updates as these trades develop as well. Give this Swing Report a shot. The link's in the description. Hit us with a like and subscribe if you wouldn't mind. That helps us out a lot. And that's pretty much it. So the reason why I include this here now is because I'm still interested in this. So here's a little freebie for you guys. I missed this play. Full disclosure, I didn't capture this. I made an attempt on this day. It's honestly kind of frustrating, but I made an attempt on, no, this day. I made an attempt on this day because we had a very strong open on the 6th. I made an attempt because we had an open above the prior day's point of control, above the prior day's range. It was a gap up. So I bought the pass back over the open and then just stopped out when we rolled back down under it. And so unfortunately, I mean, it's not a big deal. I was streaming on Friday. Oh, I'm sorry, that was here. Here's that 6, here's the open on the 6. So we were way over the point of control, way over the value area high. So I was looking for that buy, and then it didn't fall through. So I stopped out, no big deal. Unfortunately, had I run that same exact play, which is pretty much the only play that I do by the open, that would have been a banger. That would have been great. Unfortunately, I was streaming for our Slack community. But I did happen to, nail an ES trade. So it's probably would have been probably equal size, honestly. But if you're, a member in our Slack group, then you saw me trade that live. What I did in the ES is exactly what I would have done here. It's the same concept. The trading is not about, figuring out a whole bunch of new ways or different ways to do it. It's not like that. It's not like you're, being a creative in the sense of like trying a new sculpture or whatever. No, you do the same thing over and over again. It's more like a sport. It's more like a performance, like a competitive performance profession. Like when you're, football players or whatever, they're not making up new passes. Like you're just always passing the ball, right? But the different you do it in different contexts, sure, but you're just always throwing that ball, right? So anyway, that's the idea. You just got to figure out how you throw the ball. And so, again, full disclosure, I did not capture this, but I intend on capturing this in the next week to come, running the same exact play. If we get a strong open above, let's see, above 67.23, or even if we don't, even if we get a weak open up here, but we pass back over here, I'll be interested in buying this pass over. I would prefer this, like I would probably pass on it unless we get a strong open over here, no follow through under, or no test or no acceptance under this point of control, pass back over it, look to buy that open, throw your stop under here, and then let's see if we can get to all-time highs because, well, it's positioned very well for that. It's positioned very well for that. This, if we get a strong open on Monday, you should squeeze the rest of these people. Once the rest of these people are squeezed, assuming it happens, then you're an all-time high breakout, And so again, like look at its sector, this is what it looks like. The semi NVDA looks like this. So, it's positioned very well for that potential. And I'll show you how like how it's a team effort, because if you're in our Slack room, then you know that Charting Man Dan has been on this as well. So he captured this 15-minute higher low, I believe. No, I think it was here. Hang on. Here we go. Yeah. So here he starts walking through his play to capture that 15-minute higher low, and then eventually he swings it. There's whatever. This is how he played it. And so my point is that you can hit it many different ways, right? And it's a team effort. Trading can be a team game if you're working together and sharing your ideas and whatnot. So if you're interested in, seeing that play-by-plays within our chat group, links in the description, check it out. But yeah, so again, many different ways you could have done it, right? You want to trade it actively with Dan. If you want to trade it actively with me, when I push out the alerts, if you want to use our trade zone, that's fine. It's, a lot of options here. We're trying to design a product. Well, I think we've done a good job designing a product to suit multiple different trader types or styles or whatever. So anyway, that's enough rambling about ARM, I would say. GDX was another recent pick that we had, and I'm interested in this one again because here we are testing this really key point of control here at 29.49. That's this guy here, and it's pretty much been a battleground here, been a battleground here. It tries to be a launching pad for these buyers. Resist, 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 and then finally you break over it. So this is notable because we're trying to set a daily higher low here over 27.97. So same thing. If we get a strong open over 29.70, don't see any acceptance under 29.70, that's a worthy buy. Throwing your stop under the low of the day and then seeing if that is going to be good for a daily higher low. Now we do have to be mindful that there is space for a lower high under 31.91 as well. But if you're interested in looking for a gold position or a minus position, then it's a good time now. I'm personally probably going to stay focused on the ARM trade for out of stocks at least. But yeah, this is, if this is more up your alley, cool. And then finally, I am looking at CRM again because CRM, this one already came into our trade zone, gapped up way over the target. Well, I mean, it already hit our target before the gap, but this holding up pretty well, right? As long as this gap is not filled at 243.65, I think bottom fishing is pretty reasonable. What I'd like to see in this name now is it's like a break, no gap fill, and then pass back over it. I would be interested in buying that pass back over, and then just looking to target the highs of this local range. So that's pretty much it for the public picks this week. Yeah, so if you're interested in the ARM setup, I'll post it at the end of this video really quickly. And I appreciate you guys sharing some of your time and energy with me. Again, if you're interested in joining our chat room or getting these ideas or trading along with us, etc. Then links in the bottom. And I appreciate you guys checking us out. And see y'all next time. Farewell. What's going on, everybody? Hope you're doing well. So our pick within XLK is not really an XLK, and by that I just mean that it's not really been bought up by many ETFs yet because it's a pretty recent IPO, but it's a pretty interesting play. There are a few fundamental considerations. First of all, it's a Charlie Mandan special. I mean, not really, because obviously I'm not him, but he suggested we take a look at ARM. And I looked into it a bit. I had never heard of it. I know that people in the room have been trading it, but I've never heard of it. So I looked into it a little bit, and so there's a few things that we're considerate of. One is because it's not yet within XLK or any of the ETFs, it's not going to be as correlated to, again, the tech sector XLK, but it's a semiconductor name, and so theoretically it should be correlated. It just won't be, doesn't have to be as correlated, especially compared to something like Apple, which, obviously Apple trades hand in hand with XLK because it's one of its largest holdings. So that's something to be considered of, because if the ETFs do start buying shares of ARM to include in their holdings, then obviously that would be an immense amount of buying pressure. And so after I looked into it, I did a little bit of research, and apparently this ARM holdings is they are developing essentially like a new semiconductor architecture. Like right now, most Windows or all Windows machines run on either x86 or x64 architecture, and this is supposedly like the next gen that it's comparable to Apple's M chips and Apple's chips that are built in-house. The technology is comparable. This is basically Microsoft, NVDA, these competitors are trying to get a similar processor like that. So ARM is pretty much the prime name as of right now. And in fact, it turns out NVDA tried to buy ARM recently, and they just didn't. I forget. I was reading some articles about it, but I didn't really dig that deeply into it. Anyway, that's the idea. So it seems to be like this is potentially a very influential name. So yeah, they apparently have deals with NVDA and I think AMD to potentially build again new processors. And NVDA would be breaking into that space. So potentially, if NVDA were to work with ARM and supposedly they're aiming for 2025 release for processors, then that would essentially have them competing against INTC and AMD, right, for in CPU space. So anyway, that's what we're looking at. Supposedly they have pretty much ARM technology is also already in like smartphones. Like practically all smartphones use ARM technology. So yeah, that's it's quite notable, I would say. We're still going to be technical with it, of course, but I think that's all pretty notable. The market cap is already 63 billion. So anyway, the liquidity is also really good. I realize that I need to be, if I'm going to live trade these, some of these names, the liquidity is not good enough. The spread is too wide, and you can't really like just mark it in with size, which is what, we typically like to do. So yeah, that's a consideration as well. The liquidity is no problem on ARM. Must be all the hype around it. Additionally, Dan mentioned, how many IPOs will find a base and then break out, and then once they break out into a new high, they very often will have a good run. So that's all the fundamental stuff. And from a technical perspective, how I'm looking at it is like this. If you zoom into the 5-minute time frame, you'll see that this very healthy daily range that we were just looking at, this guy over here, right? So that is essentially the lows of this big old daily range has essentially been made by this guy. If you zoom into this little 5-minute EQ, the value area high held the price here, and then the value area high holds price again 2 times here, nearly to the tick both times. So letting us know that this structure is super key. And then the lows of this trade zone is just based off of this gap. This is where the gap is, right? And so this was notable change. A gap is always change. And then the change was negated once the gap was filled. And so you'll notice how there's problems here, right? Why do you have resistance here for these 2 sessions? It's because this change was trying to be negated by the buyers, and the sellers were trying to defend that. Eventually, the sellers lose. And so now the reverse is true. As long as this old gap, right, isn't refilled, then this change is not being negated, right? The change of the change has not been negated. You see what I'm saying? So that's why the lows of our trade zones are as such. I will say that this is a very conservative approach to a trade idea like this. I'm probably going to play it more aggressively. If we get a strong open on Monday, if we get an open above the point of control on Monday, then the point of control being 63.99, then I'll probably look for an aggressive buy, either bottom fishing off of the point of control with a stop under this structure, or buying a pass over the open and then throwing my stop over the open, or potentially both. Like if I try the open play first and then we stop out of that, I'll look for that next play off of the point of control using here as a stop. Okay, so that's probably how I'm going to approach it. If you're more conservative, then this is also a very reasonable conservative trade zone. The idea is, again, it's based off that 5-minute structure, that prior high, but also off of the lows of this local structure here. So that if price were to drill back down here, as long as this guy is holding price, then bigger picture, it's doing fine. All right, because there is a lot of space for an hourly higher low. This could be a bull flag, or we'll just pull back more and look for a higher low. We'll see. So that's pretty much it. I personally am probably only interested in those two aggressive plays that I laid out. I wanted to go right away from here. And the targeting is just also based on the 5-minute time frame. There's like a tiny little bit of balance over there, and you can also just kind of see how there was that major high. Just this tiny little bit of 5-minute balance, and then this prior high where price popped over there and then couldn't hold above, and that's how it closed on this session, and then it opened up above and then grinds that level. So clearly telling you it's important. I would not be surprised if we were to revisit it, and so that's the logic behind the targeting. Okay, so that is it for ARM. I'll see y'all really soon for the other trade ideas.